Hey, Dan Passarelli here. Well, the S&P 500 closed up just a teeny weeny bit today, up 0.2%, with the SPY at 683 even. That's up from being down a bit also earlier in the day. And so the recovery over the last 2 days is continuing. Notably, we still have this gap where prices didn't trade. Gaps are said to be filled at some point. And also notably, we have implied volatility sitting at, well, the VIX is at 1728. So still high and still gives us good opportunity to sell options. Now, that being said, people often ask me for trade ideas. And look, I'm the first to tell you, I can't see the future any better than anybody else. What I'm good at is doing math and knowing what math needs to be done. And so there is a stock that models out pretty well as far as what my numbers say. Now, this is a stock called Pilgrim's Pride. And in an age where we have stocks like CoreWeave and NVIDIA and all these just exciting stocks that are all in the news that everybody talks about, those are so exciting. And sure, they are. They're making things that are driving our future, and they have big up days and big down days. But to me, stocks like this, Pilgrim's Pride, PPC, can even be more exciting. And here's why. So this stock, if you look at the chart, some people who are just pure chartists might say, gosh, this looks terrible. But for value investors, people who have the patience to hold on to something for a while, could be 3 months, 6 months, could be a year, to build that wealth. And so I'm talking more investing than trading. There's some real nice advantages here. Now, this has a forward PE ratio of 7. The industry's average for their industry is 14. It's a massively cheap stock. Its price to book is 1.8. It's got a good debt to equity. All the analysts have much higher buy prices on this, and they're chicken processors, right? Not sexy like NVIDIA's chips and all that. But underpriced stocks tend to equilibrate and head back up to their value. But just buying and holding it, that's not that exciting either. So what I like to do in these situations is sell puts. Now, with this stock trading at $37.79, going out to the December, which tomorrow when the market opens, we'll have 37 days to expiration. These are really wide markets. Now, I tend to caution people to not trade options that have really wide bid-ask spreads. But in a situation like this, I'm not too worried about it because it's something that I'd be okay holding until expiration. And I actually want to take assignment on it because I'd be buying the stock even $2 lower at an even bigger discount. But let's talk about, and so to me, that's the best case scenario, getting assigned. But let's talk about the other scenario. Let's say I put in an order to sell these 35 puts at 80 cents. Now, let's say 75 cents. Now, first of all, there's no guarantee that this gets filled. I mean, hey, this is just a trade idea, right? There's no guarantee in the market about anything. But let's just say we put in a 75-cent offer and at some point get filled. Okay? So 0.75 divided by the strike price, which for a cash secured put is how much cash we'd be putting up. That's 2.14% for that 38 days. But let's annualize it. So times 365 equals divided by 37. That's a 21.1% annualized return. if the thing you don't want to have happen happens, if you skate and don't get assigned. I love putting together trades like this that are goal. I don't want to say win-win to give it the impression that, like, you know, I'm promising this trade is going to work. I think it is. I've got this trade on in a disproportionately bigger size than I usually do because I like it a lot. In fact, I've gotten assigned on some puts already. But so instead of saying win-win, I'll say goal hit. When I can do that, where if I get assigned, great, that's exactly what I want to have happen. If I don't get assigned, I'm still making money at a 21% annualized return. That's strategy, and that's what good option trading is all about. Hope that helps. This is Dan Passarelli, Trade Smart.